How do interest rates and housing shortage affect demand?
Welcome to your Money Monday.
I'm Rich Motz. Welcome to Money Monday, session 351, brought to you by the Motz team with Cutler Real Estate. Supply and demand. You know, a lot of people know what housing inventory does to it, but let's talk about what interest rates does to it, okay? So check it out. Recently, we've had rates over 7%, and they've been trending downward recently. And what that means is when rates are between 7 and 7.5%, there's weak buyer demand. When they're between 6.5 and 7%, there's limited buyer demand. And when they're between 6 and 6.5%, good buyer demand. And 5.5 to 6%, it's gonna be strong buyer demand. So right now, here's where we're sitting. It's been waving right here between 6 and 6.5. So we're in good buyer demand world right now, folks, according to interest rates. In interest rates, here's what they've been doing. You know, the roller coaster, they really did shoot up from in the threes to a little bit over 7%. Now they dropped back down, as you can see there. So there's historic going back a little bit from 2016 to now. Now, what are they projecting in the future? Between Fannie Mae, the Mortgage Bankers Associations, and National Association of Realtors, the average of all three is what I always like to take a look at. They're going to vary between 5.6 and 6.23%. Now, there's many experts saying they're even going to drop lower than that. So you can actually buy now, and many lenders will finance you 6 months later for free. So contact us to get the details on that. So where are rates going? This is what actually Freddie Mac is saying right now. So again, between 5.2 and 6.2 in the next 4 quarters of 2023. Again, where they've been and where they're projected to go. So it's looking good. So again, you know, we are sitting here when they drop down later on this year, we're going to be in strong buyer demand. So that's going to be good. Now, a lot of pessimists about the economy, bad talkers about what's going on in the housing market, thought that this was going to happen, that housing inventory was going to go boom, crank way up on that dotted line right there. But guess what, folks? Here's what it really did. It really followed the years past here, and housing inventory is still now below previous years, okay? You can take a look at, here's another way to look at this graph. 318,000 listings in the United States compared to, you know, well over that in years past. Months inventory here again, you can see that they're taking a drop once more, and guess what that does? Supply equals demand. So the lower supply, the higher demand, of course. Again, another look at it, showing 2.9 is right now, and guess where Stark County at and greater Northeast Ohio is at right now, folks? Right at 3%, and guess what that means? It means we're in a seller's market. Stark County is right now a 3-month supply, still right in the middle of a seller's market there. Less than 6 months is a seller's market. Neutral market, normal market, 6 to 7 months of supply, and more than 7 months means it's a buyer's market. So it is still a seller's market, folks. So contact us, the expert, to know what's going on. Go to buywithmotz.com to get your guide to selling in winter of 2023 sent right to you, or go to sellwithmotz.com if you're even having any thoughts of listing or selling. Go get this guide to know what's going on. And if you don't know what your home is worth, contact us at the Motz team at yourincreasedhomevalue.com. That's yourincreasedhomevalue.com. Thanks so much.